We have Andy Miedler, analyst at Edward Jones, and he has returned 34% to clients with his calls on IBM shares. And for full disclosure purposes, Andy doesn't own any IBM shares, and he joins us on the line from St. Louis, Missouri. Andy, great to have you back with us. It seems the street was disappointed by these numbers from Big Blue. Were you?
No, overall, I think these were pretty positive numbers. We've come to expect out of IBM to meet or beat expectations quarter after quarter, and this is no different. The shares have run up over the last week a fair amount, so we think that, investors already expected these strong positive results. So there's a little bit of a profit taking here, given the beat by IBM wasn't as large as some had hoped for.
Yeah, and Andy, people are focusing in on these service signings as well. They dropped 2% and fell during the quarter. And some are saying that signals that corporate buyers are still delaying some of their tech spending.
Well, we'd still say it's a tough market out there, and the IT services business is very lumpy in nature, given some very large deals that move through the pipeline. So, seeing the overall signings down a bit isn't really what we want. The one thing that we key in on is the consulting side of the business. This tends to be the leading indicator of what we should expect for the overall business, and we actually saw consulting signings up 18% in the quarter. So we think that's a good leading indicator that tech spending is slowly recovering here.
And plus, you can see that with PC shipments as well, and the forecast coming from Intel and AMD. Andy, let me just quickly ask you about IBM stock, because it has lagged the gains that we've seen for the S&P 500 so far this year. But a lot of analysts, including yourself, say it's cheap. It's trading maybe 11 times forward earnings.
That's right. We think it's attractively priced. It's trading just, 11.5 to 11.8 times 2008 earnings, which we certainly think is attractive given the improving growth outlook we expect out of IBM. We simply think they're a different company than they were 5-10 years ago. They've divested many companies, made more than dozens and dozens of acquisitions to focus on higher growth, higher profit IT services and software. And we're seeing that come to that transformation really help the company throughout the downturn and position them for faster growth going forward. So we think the shares deserve a higher price than they're trading today.
And Andy, as you mentioned, there was a run-up to Big Blue's shares in the lead-up to these earnings. You're still calling it a buy at this point. So I know you don't give out target prices, but how about run-ups upside for the rest of this year?
We certainly think it's attractive. It's trading below the overall market. It's trading below overall tech for a company that we think could grow at least in line with the market. In addition, is very strong financially, and we expect them to continue to raise their dividend over time. So we think this is a core holding for investors, and think that it should do well for investors over time.
Now, Andy, you're the #1 ranked analyst on Big Blue, and you have been calling it a buy since 2006. What is Big Blue going to do one day that may change your mind?
Well, the one thing that we look for them, that investors always look for them, is a slowdown in growth. Given they have around $100 billion in overall revenue, growth is a challenge for them. So at some point, given they're, the #2 largest technology company, it's simply a large of law numbers that at some point they won't be able to grow at the rate we'd hope for. But right now, we certainly think they have a good growth trajectory, given the business transformation that we've made that leads to increasing growth and increasing profitability, which we think is positive for shareholders.
Okay, Andy, thank you for sharing your time on your Monday evening with us. As Andy Miedler, the #1 ranked analyst on Big Blue shares, and he's from Edward Jones.